Good morning. Welcome to our virtual class in your subject ACTG 6153, and that is Fundamentals of Accounting Theory and Practice. Our discussion today is on the week 2 module, and this is entitled Introduction to Partnership. And I'm your professor, Susan Maminta from AMA East Rizal branch. This module will introduce you to the basic concept and theories about partnership. This will present to you the definition, characteristics, advantages, and disadvantages of partnership. So with the details of a partnership contract or articles of partnership, the classification of partnership and its definition, and the kinds of partners and how they are distinguished from one another. What is this partnership? Partnership is one of the forms of business entities. It is a more complex as compared to sole proprietorships. Its complexity includes the capital requirements and contributions and sharing of profits and losses and the dissolution of process. Partnership has been defined by the United States Uniform Partnership Act as an association of two or more persons who co-owns a business for profit. In the Philippines, we have this Article 1787 of Republic Act 386 that defines partnership as by the contract of partnership, two or more persons bind themselves to contribute money, property, or industry to a common fund with the intention of dividing profits among themselves. Two or more persons may also form a partnership for the exercise of a profession. What are the characteristics of partnership? One is that it has a separate legal personality. That means has a juridical personality that is separate and distinct from that of each of the partners. Number two, it has a limited life. That means if one or more of the partners withdraw from the partnership, the old partnership will be dissolved and a new partnership might be created to continue the same business. Number three, it has a mutual agency. That means each partner can act as an agent of the partnership in matters within the regular partnership business operations. Number four characteristics, unlimited liability. That each partner except limited partners is individually or personally liable to the partnership debt in the event that the partnership can no longer pay its obligation with the business assets. Creditors may run after the personal assets of the general partners. Another characteristic is the co-ownership of properties and division of profits. All the assets invested by the partners and those acquired or owned by the partnership belongs to the partnership. The profits are shared by the partners depending on their agreement. In the absence of any agreement on how the profits and losses will be divided, it will be shared in the ratio of their contributions to the partnership, while the industrial partners do not share in the losses of the partnership. There are advantages in partnership and as well as disadvantages. Now let's talk first the advantages of partnership. Number one is that it compared to a sole proprietorship, partnership capital is bigger as it can raise more capital because of the two or more persons forming it. Another advantage is that it has a better management. That means all partners bring together their expertise. Another advantage is that compared to a corporation, it is easier and less expensive to form this kind of organization partnership. Number four, it has a less legal requirements of the government as compared to corporation. Partnership must also be registered with the Security and Exchange Commission. Number five, it can be organized for the practice of professions like CPA, lawyers, etc. For disadvantages, one is that the possibility that disputes and misunderstanding may arise among partners. Another disadvantage is that unlimited liability of general partners will result to their personal obligation to the partnership debts. Another disadvantage is that limited life of the partnership as compared to a corporation. A corporation have a maximum life of 50 years and it's still renewable. Another disadvantage, the transfer of interest of a partner requires the consent of all partners. And the last one, compared to a corporation, a partnership has a smaller capital. The partnership contract is also termed as partnership agreement or what we call articles of partnership. Although partnership can be orally formed, it is advisable that it be made in writing in order to avoid future misunderstanding among partners. The information and agreements that should be clearly stated in the articles of partnership are the following. Number one, the name of the partnership and the partners forming it. Number two, what the purpose of the partnership. Number three, location of the business. Number four, nature and scope of the operations. Number five, date of its formation and terms of existence. Number six, contributions to be made by every partner and the capital credits given to them. Number seven, the books of accounts to be used by the partnership and how will they are kept. Number eight, the methods on how the profits and losses will be shared by the partners and the special compensation that might be given to partners for services to be rendered. And number nine, the rights, powers, roles, responsibilities, and obligations of each partner. Number 10, the issues on additional investment that a partner will put into the partnership and limitations on withdrawals that a partner can make. Number 11, arbitration of misunderstanding and disputes among partners. Number 12, provisions in case of the dissolution of the partnership. And the last one is the methods that will be used in determining the value of the business in case of sale, death, disability, or withdrawal of a partner and dissolution. So if you want to see example of these articles of partnership, then you can go to our module. We have already sample of these articles of partnership. Now, moving on, let's talk about the classification of partnership. One of the classifications is that universal and particular partnership. Under universal and particular partnership, partners agree to bring into the partnership their whole property. And this has two kinds. One is universal partnership of all present properties, and another one is the universal partnership of profits. Okay. For universal partnership of all present properties, that means the whole property of a partner in the time of the formation of the partnership becomes common property for all partners, as well as the profits that can be derived from them. While a universal partnership of profits, one which states that only all the property acquired through work and services of the partners during the existence of the business becomes part of the common tent of the partnership. The property of each of the partners at the time of the contract shall still be owned by each of them. While a particular partnership is one where the partners unite to have a single individual transaction or business and divide the profits among themselves. For number 2 classification of partnership, this is general and limited. A general partnership is the basic form of partnership. Each partner are called as general partner and the owner of the firm, sharing all the privilege and profits, losses, and risks of the business. While a limited partnership is a kind of partnership that is composed of at least two kinds of partners. So you must have a general partner and a limited partners for a limited partnership. The general partner will absorb the majority of risks of the business, especially when it goes bankrupt. The limited partners are so-called limited because their personal obligation to the liabilities of the partnership is up to the extent of their capital contributions from the partnership. Okay, now let's proceed with the kinds of partners. Number 1, we have a general partners. This partner or these partners' liabilities is unlimited. For a limited partner, the partnership debts is limited to the extent of his personal contribution to the firm. While a capitalist partner, one who contributes money or property to the common fund. That means they are the partner who contributes money to the partnership. And number 4 is the industrial partner, one who contributes his industry or services to the partnership. He shared in the profits of the partnership, but not in the losses. So another kind of partners, we have a silent partner, the one who is known publicly as a partner, but does not participate in running the affairs of the partnership. Another kind of partners is the dormant partner, one who is not known as partner and does not participate in running the partnership. While a secret partner, one not known as a partner, but actively participates in managing the partnerships. And a nominal kind of partner is a partner who contributes nothing to the partnership, but allows his name to be used in the firm. A capitalist industrial partner, that means one who contributes money, property, and also services to the partnership. And the last one is ostensible partner, one whose name appears in the firm name and known publicly as a partner. So that ends my discussion this morning, and I'm now giving you my last slides, and this is the end of my discussion. Again, class, thank you for listening. Bye-bye.